Okay, we will go ahead and get started as people continue to log on. Good afternoon. My name is David King. I'm with UVA HR, and welcome to the VRS retirement presentation as part of this year's Benefits Expo. With me today, I have John Cagle with VRS. John is the Member and Education Outreach Counselor, and he will go through the VRS plan. A couple of housekeeping notes. If you do have questions, we ask that you please use the Q&A feature that's part of Zoom. I will go ahead and answer those and or pass those along to John. We will probably hold all the questions until the end of the seminar, and then John will take the time to go through those. We are scheduled for an hour. If we do go a little bit over, John will stay and answer any of those questions for you. And with that, I will turn it over to John, and we are ready to go. Thank you.
Thank you, David. Good afternoon, everybody. I'm John Cagle with the Virginia Retirement System, and my job, generally speaking, takes me out in the field, and I'm on the road 3, 4, 5 days a week, traveling my territory, which a big part of is UVA. I've been sitting at my home office since March 17th, not allowed to be on the road, and it looks like, and I've been told, we're doing that at least through the end of the year. A lot of unbelievable things going on right now in our lives, but one of the things you can depend on is your VRS benefit. And we're going to talk about exactly what that means as we go through. I would imagine most folks have tuned in today because you're approaching retirement and you want to know more about the benefit because it's more prescient to you. So today I'm going to help walk you through your retirement options and the benefits available to you. And we'll also touch on what happens if things don't go quite as you planned, which seems to happen so often these days. So let's get started. If you want to make informed decisions about your retirement, you need to know how your plan works and just when you're eligible for retirement. So we're going to start by determining the plan that each of you may be in. You're a Plan 1 member if your membership date is before July 1, 2010, and you were vested as of January 1, 2013. What does it mean to be vested? Well, being vested means that you have at least 5 years of service credit under your belt. So you're eligible to retire when you meet the age requirements for your particular plan. And we'll talk about those in just a few minutes. You're a Plan 2 member if your membership date is before July 1, 2010, but you were not vested as of January 2013. Or if your membership date is on or after July 1, 2010, but before January of 2014, you're a Plan 2 person. Now that's what happened to me. I'm what we call technically a non-vested Plan 1 person. I started before July of 2010, but I didn't have 5 years under my belt as of January of 13. So I am technically a Plan 2 person. If you're still not sure what plan you're in, understanding those simple rules, the easiest way to determine which plan you're in is simply to log into your MyVRS account. That's your personal online account with the Virginia Retirement System. Right there on that home page, it's going to tell you if you're a Plan 1 or Plan 2 person, or if you're in the newer hybrid retirement plan. Now, I would tell you this presentation is really only designed for people in Plan 1 and Plan 2. We do have other presentations live and recorded on our website that talk specifically about the hybrid retirement plan. So what does it mean to be a member of Plan 1 or Plan 2? Well, each plan has different retirement eligibility requirements, and also the plan you're in affects some of your benefits differently. And we'll point out these differences as we go. Before we look at plan eligibility, though, it's important to understand how your retirement benefit is calculated. So keep in mind that VRS is what we call a defined benefit plan, a pension. And for VRS purposes, what that means is that your benefit is not calculated based on the amount of money that you've got in the system. And if you're like me, that's good news. It's not driven by the amount of money that you've contributed over the years, at 5% of your salary. Instead, your benefit is based on a formula, and the formula takes into account things like your age at retirement, your years and months of service, and your average final compensation, or AFC. What is AFC? Well, for Plan 1 members, AFC, average final compensation, is the average of the highest 3 consecutive years, 36 consecutive months of salary, wherever it appears in your salary history. For most people, that's going to be the last 3 years of their employment, but not always. If you're a Plan 2 member, we're looking for the average of your highest 5 consecutive years of salary. Again, wherever it appears in your VRS employment history. If you're in a contract where you work less than 12 months a year, then your average is calculated on the 3 highest consecutive years. For example, if you're a 10-month employee, we're looking for the highest 30 consecutive months of salary if you're a Plan 1 person. If you choose to retire early in that formula, there's a reduction factor that is also applied until you reach an unreduced eligibility. And we'll talk about reduced and unreduced eligibility for retirement benefit in just a moment. But just understand, the big thing to understand, it's not about the money. Good news. You log into your MyVRS account, you'll see a bucket of money on the bottom left-hand corner of your home screen that'll be identified as member contribution account. That money plays no role in the calculation of this benefit. It's simply the first money paid out toward your benefit. It's going to last you 2-3 years in retirement, generally speaking. Once that money is exhausted, of course, this is a guaranteed benefit every month for the rest of your life. Once that money is exhausted, the source of your retirement income switches to the trust fund that all of our money is being used to make money for. Guaranteed benefit every month for the rest of your life with cost of living adjustments. So you're thinking you might be ready to retire, but how do you know for sure? What if you don't have enough service or as much as you'd like to have? What happens if you get a raise? How would that impact that average final compensation? Would it be worth your while to continue to work longer to raise that average final compensation? Well, your personalized MyVRS account allows you to run an estimate. There's a tool built into your account based on your current numbers and create scenarios to compare estimates. There's also a retirement income planner, which can help you by providing a more complete picture of your retirement. You can include expenses, you can run different retirement scenarios, and even add outside income, such as an IRA, Social Security, defined contribution plan, your 457 or your 403B. In addition, MyVRS also offers other helpful features, and we'll talk about those topics in a few minutes. But you can use these MyVRS tools to check the amount of your life insurance coverage, for example, purchase prior service, and if you decide to take a refund after leaving your job, you can apply for that using MyVRS. In the near future, you'll also be able to apply for retirement using MyVRS rather than using a form, which will make the whole process much more convenient and streamlined. Now, another great feature of MyVRS is access to financial wellness information that's tailored specifically to your situation. You can view videos, calculators, educational games, budgeting tools, and a library of mini courses to evaluate your current financial knowledge and improve the money skills that are most important to you. In addition, the VRS website offers general information about ways to fine-tune your money management skills and make better sense of credit, insurance, taxes, and other financial mysteries. And you can access these articles, infographics, and videos to help you make the most of your finances and manage your money effectively as you plan for retirement. So be sure to check out the financial wellness resources in your MyVRS account to help grow your knowledge and confidence in making those day-to-day financial decisions that will prepare you for retirement. And since MyVRS is such a powerful tool, it's important that you register to claim your account. And by completing the identity verification steps, you help prevent someone else from attempting to lay claim to the account fraudulently. Now, as I mentioned a few minutes ago, age and service are part of the formula for calculating your retirement benefit. Remember, there's a reduction factor if you retire early, so you need to think about how long you want to work, how long you need to work, and what your benefit amount would be for either a reduced early or unreduced full retirement. These are the rules for Plan 1, civilian, if you will. Plan 1 members, you need to be at least age 55 with 5 years of service. Remember, vesting is at 5 years, or age 50 with at least 10 years of service to retire with what is called a reduced benefit, meaning that there again is a reduction factor in the formula. And the longer you wait, the smaller that reduction factor gets when the calculation is run for your benefit. For an unreduced or full retirement benefit, you must be at least 65 with at least 5 years of service, or age 50 with at least 30 years of service. Again, use your MyVRS account to verify your service and see whether a reduced or an unreduced benefit works for you there. Within your MyVRS account, you can verify your salary history, you can verify your employment history, you can verify your life insurance, for example. There's a variety of things you can do in addition to using the benefit estimator tool. For Plan 2 members, it's a variation on a theme. You have to be at least age 60 to qualify for a reduced or early retirement benefit. For an unreduced benefit, we have something called the rule of 90, meaning that your age and your service credit together must equal at least 90. So for example, if you're age 60 with 30 years of service, you meet the eligibility requirements for an unreduced, or as we call it, full retirement benefit. You also meet those requirements if you reach your normal Social Security retirement age, whatever that is for you, and have at least 5 years or more of service. If you were born 1961 or later, right now your normal Social Security retirement age is 67. Now, as we mentioned before, age and service are a huge part of the formula for calculating your retirement benefit, and we also mentioned there's a reduction factor in there if you retire early. For both Plan 1 and Plan 2 members who are in hazardous duty roles covered under the Enhanced Hazardous Duty Benefit, they have the same age and service requirements. For a reduced benefit under hazardous duty, you must be age 50 with at least 5 years of service. And for a full, or unreduced as we call it, retirement benefit, you must be age 50 with at least 25 years of service, or age 60 with at least 5 years of service. Again, use MyVRS to verify your service and run estimates. Also, depending upon when you were hired, you may have a higher multiplier you use to calculate your benefit if you're in a hazardous duty position in Valors, or you may receive a hazardous duty supplement in addition to your monthly benefit. And you would get that, if you're eligible for the supplement, until age 65. So you want to check with your employer to make sure all your eligible service will be certified as hazardous duty. And if you're eligible, like I said, that supplement is paid until age 65. Now, one way to enhance your benefit is to purchase service. Purchasing service can not only increase your benefit, but also count towards the 5 years of service required to be vested. And we just learned about the service requirements to be eligible for retirement, and purchasing eligible service can help you reach those service requirements quicker. It may also help you become eligible for things like a health insurance credit, which helps you pay for health insurance premiums in retirement. To be eligible to purchase prior service credit, you must be an active member. You must not be retired or have terminated your VRS covered employment when you're purchasing or trying to purchase that service. In addition, the service credit that you're purchasing must not entitle you to another retirement benefit. For instance, if you're entitled to a retirement benefit from another state or from the federal government, you cannot purchase that same time to add to your VRS service. Let's look at a couple of types of this eligible service. The types service you see on this screen are what we call unlimited types of service. The categories are divided into two categories: unlimited and limited purchase amounts. So these are unlimited, meaning you can buy as much as you're eligible to purchase. For example, if you have 65 months of refunded service, you can buy all or part of that service, whatever you decide. For the types of service you see here, you can only buy a total of 48 months combined. So for example, if you have 36 months of federal service and 24 months of public service, which would be, let's say, in another state, or perhaps working for the city of Charlottesville, has their own retirement system, you would only be able to purchase a combined total of 48 months. The two exceptions to this rule are active duty military service and school superintendent service. You're allowed to purchase additional service above that 48-month limit if you have these two types of service. For specific rules, you can refer to the Handbook for Members on the VRS website, or check with your HR department, or call VRS. Now, if you buy your service within 2 years of becoming eligible, meaning becoming a VRS member, you can buy it at what's called approximate normal cost. An approximate normal cost is the average cost for a VRS member for 1 year of service credit. If you buy it after or outside of that 2-year cost window, it'll be at what we call the actuarial equivalent rate. And this rate represents the money needed in today's dollars to pay for the increase in your future retirement benefit or an earlier retirement eligibility based on purchasing that prior service. And when you reach the end of that 2-year window, you have to initiate a new purchase since the costs will change. For example, if you had educational service to purchase and your cost window ends on May 1st of 2021, you can purchase that service at approximate normal cost until May 1st of 2021, and then you'll need to start a new agreement at the actuarial equivalent rate to buy the remainder of that service if you care to. The one exception to these rules is refunded service. You can purchase refunded service at any time, and the cost is based on returning the initial refunded amount with interest from the date of the refund to the purchase date. The interest rate is based on the assumed rate of return for VRS, the VRS fund, and that current rate is 6.75%. Now, there are several payment options for purchasing service. You can pay with a lump sum payment through a purchase of payment agreement at work, or a combination of the two. A lump sum can be paid with a personal check, a rollover, or a trustee-to-trustee transfer. And if you decide to pay with a purchase agreement, then you can choose between an after-tax payroll deduction or a pre-tax reduction. And all state employers should offer that. Keep in mind that if you enter into a purchase agreement, then that agreement duration must be for a minimum of 6 months, unless you have less than 6 months of service left to purchase, and the agreement cannot extend beyond 12 months. So again, you want to check with your HR department or contact VRS to find out more about your specific payment options. So now that we've gone over the retirement eligibility requirements and how you may be able to increase your benefit, we're going to next look at the payout options that are available to us. Again, you'll find the benefit estimator tool in your MyVRS account to be very useful in determining which benefit option works best for you. In fact, if I were to meet with you one-on-one, and I certainly offer that to UVA once a month, we would be using your MyVRS account and running estimates within that account. It's very reliable. So I would encourage everyone, if you haven't already, to register for your MyVRS account, go through the registration process, and use the benefit estimator tool to look at the options we're going to go over next. The first option we'll talk about is the basic benefit option, and that pays you and only you a monthly retirement benefit, and that benefit ends with your passing. This is the most commonly selected benefit payout option of all the options we'll go over today. It's probably what 80 to 85% in a given month of our retirees go with. The most bang for your buck in retirement. If you pass away before your member account balance has been depleted, That's that first money paid out toward your benefit, the 5% that we each pay in every month. Any remaining funds in that account will be paid to your designated beneficiary in the form of a lump sum payment, but there is no monthly benefit left to anybody else after you pass if you go with the basic benefit. And once you retire, you cannot change this benefit option. Next, we have the survivor option. And again, you can look at the survivor option. It's become a more and more popular option because it allows you to leave a benefit with your passing to whomever you care to leave it to. Most commonly, we see a spouse, but you could leave it to a sibling, a parent, a child. But most commonly, we see it to the spouse. Has an impact on your monthly benefit. Compared to the basic benefit, it's a reduced benefit when compared to the basic benefit. So you can provide a monthly retirement benefit for someone else after your death. The technical term for this person is contingent annuitant or survivor. Who can a survivor be? As I said, it can name anybody you want. And how much will that survivor receive? Well, that's up to you. You need to determine the percentage of your benefit you want the survivor to receive. And when you go to file for retirement, you need to indicate that percentage if you do select the survivor option. The percentage can be anywhere from 10 to 100%, although the IRS may limit the percentage you select for a survivor that is not your spouse. Now, because this benefit is paid beyond your retirement, your monthly amount is less than the basic benefit. The amount your benefit is reduced will depend on the percentage of the benefit you leave to your survivor and the age differential between you and that person. To determine the percentage, you want to consider your needs in retirement as well as the needs of your survivor. I talk to a lot of people who would like to be able to do a survivor option, but they need every penny of that basic benefit. So a survivor option is, while it's an alluring thing like a plop, it's not for everybody, but it's an option we should all consider when we're looking at our retirement. Now, in certain cases, unlike the basic benefit, the survivor option may be changed, such as when your survivor predeceases you or you divorce. The survivor may also relinquish the right to that benefit. You can either change to the higher basic benefit one time, or you can name a new survivor one time. If your survivor wishes to relinquish that right, you must provide VRS a written consent from your survivor giving up claim to a benefit along with proof of your survivor's good health. In addition, if you divorce, you may be able to change the option as well, depending upon how long you were married. So, the partial lump sum option payment, or PLOP. The PLOP allows you to receive a monthly benefit and a lump sum payment of up to 3 times your yearly benefit, but there are requirements you must meet. First, you have to work at least a year or more beyond the requirements for an unreduced retirement under your specific plan. And any prior service you purchased will count toward your total eligibility for an unreduced benefit, for example, but purchasing service cannot count towards fulfilling that additional work time requirement. You have to do the time to earn the PLOP. You must also select either the basic benefit or the survivor option. You cannot take a PLOP with the advanced pension option, and we'll talk about that in a few minutes. One thing to remember about the PLOPs, if you elect it with the basic benefit, because the PLOP is paid from your member contribution account first, there may be no balance in that account to pay to a beneficiary upon your death. It can take all that money up right away if you go with the PLOP. So taking into consideration your own personal situation, you may want to assess your life insurance needs or look at a different payment option. Again, a lot of people are eligible to do a PLOP, but they need every penny of that monthly benefit, right? So consider it as an option. Do it with either the basic or the survivor option. If you do it with a survivor option, that's really 2 sets of reductions on your monthly benefit, right? The first reduction because you're going from a basic benefit to the survivor, and the second reduction adding that PLOP rider, if you will, to that survivor option. The amount of the lump sum payment depends on the number of years you work past an unreduced retirement. So if you work quite frankly, 1 year beyond your eligibility for an unreduced retirement, you can receive a plop of 1 time your annual benefit. If you work 2 years beyond, you receive a plop of up to 2 times your annual benefit. And obviously, if you work 3 years beyond, the plop amount will be 3 times your annual VRS benefit. And even if you work more than 3 years beyond, the most you're ever eligible to take is a 3-year plop. If you do select a plop, I would strongly encourage you to consult with a tax advisor or financial advisor. They can help you to understand if doing a plop is a good idea for you in your circumstance, because VRS for most people, hopefully, is only a piece of the pie, right? They'll help you understand whether you should have that lump sum paid directly to you, all or part of it, or have all or a part of it rolled over, as we call it, into a tax qualified plan, such as an IRA, or your cash match plan, your 403B, 457. If you're an eligible participant of the plan, and if you choose to roll it over, then you defer taxes until you actually begin to withdraw the funds from that plan. The money will then be subject to the rules of that plan. So be sure to also consult with your your plan administrator or financial advisor to discuss withdrawal requirements and potential penalties. If the plop is paid directly to you, the payment will be subject to a 20% withholding for federal taxes and 4% withholding for state taxes if you are a Virginia resident. You may also be subject to an additional taxes and penalties, additional taxes at tax time, having that lump sum dropped in your lap. And you may also be subject to a penalty if you're under the age of 59 and a half at the time of the distribution, because that money would count toward your earned income for the year. So depending on the amount of your plop, throw you into a different tax bracket. All right, the final option we have to touch on today, is the advanced pension option. The least selected of our benefit payout options. In some areas it's becoming more popular, but I usually say 2% or less of our retirees go with the advanced pension option. The advanced pension option used to be known as the leveling option because it provides you with a level source of income in retirement between VRS and Social Security. I actually like that name better, between you and me, but we call it the advanced pension option. So it provides a more balanced income during retirement when coordinated with Social Security. You receive a higher VRS benefit initially, even greater than what the basic benefit would be. But when you file for this benefit, you're also going to tell us when you intend to start taking Social Security, which can be no sooner than 62 and no later than your normal Social Security retirement age. You're going to tell us that. And at that designated age, your VRS benefit's going to automatically reduce. We do not contact Social Security on your behalf, so you have to have that on your calendar. Maybe that's one reason why it's not as popular as it might otherwise be, because you have to keep it on your calendar. You have to be aware that you need to start the ball rolling with Social Security 60 to 90 days prior to that reduction date. But between the two, the benefit's never going to be any more than it initially was. Whereas if you had gone with the basic benefit, we don't care when you take Social Security if you go with the basic benefit or the survivor option. Take Social Security whenever you care to, even wait until age 70 if you care to. It has no impact on your VRS, and whatever that amount is, it's going to be over and above what that basic or survivor option would have been. Have an example here to help clarify, because it can be a little confusing. This person is deciding to retire at age 60. Now, we'll call him Mark, and if Mark chooses the basic benefit using the benefit estimator tool, he'd receive the same amount from VRS until his death. Even when his Social Security benefit starts, you can see his VRS benefit does not change, right? Now this is Mark if he goes with the advanced pension option. When he retires, he tells VRS that he wants to receive an increased benefit amount advanced pension option until age 64. and that's represented by that gray bar on the left. This means that from age 60 to 64, Mark will receive his VRS benefit with a temporary increase. And once he reaches age 64, his VRS benefit then reduces by the amount of the Social Security estimate he provided to VRS at the time of retirement. And you can see that if Mark begins receiving his Social Security benefit at age 64, which is a reduced Social Security benefit, by the way, then the amount Mark receives over time is level. There is no step up once he starts Social Security. Remember, it's your responsibility to coordinate that benefit with Social Security if you want your combined income to be level. In this example, if Mark hadn't started his Social Security benefit at age 64, his VRS benefit would have still reduced, and Mark would have been left holding the bag there until he got the Social Security benefit online. Now, because the advanced pension option works in conjunction with your Social Security benefit, as I mentioned earlier, you need to get an estimate of your benefit from Social Security. Now, there are 3 requirements for this estimate for VRS purposes. First, your estimate must be based on the age you select for us to reduce your benefit. That's the age you're going to include on the retirement application as well. Second, your estimate must assume no earnings after your retirement date. That is not to say you may not work after you retire from a VRS covered position. You certainly can. We just need that to properly have the proper number to calculate how your benefit is impacted. And I'll talk about working after retirement in a few minutes. Finally, that estimate needs to be dated within 12 months of your retirement date. And again, VRS and Social Security do not share information. So VRS will automatically reduce your benefit based on the age you tell us, whether or not you've actually begun receiving your Social Security benefits. So again, this means you need to plan carefully and select the right age for your VRS benefit to reduce. A few other key points about the advanced pension option. If you're looking to retire with a reduced benefit under Plan 1, age 50 with at least 10 years of service provision, then you're not eligible to take the advanced pension option. Also, the advanced pension option is a standalone option, meaning that it cannot be taken with other payout options such as a survivor option or lump sum. It's a benefit paid to you every month for the rest of your life, and it ends with your passing. Now, you remember at the beginning of the presentation, we looked at the formula used to calculate your benefit. So now that we know the retirement options and how they work and what's available to us, we'll look at a couple of examples here I have for you to show how that formula works for some of the different options. This is Steve, and he's a Plan 1 member, and he's considering either the basic benefit or the advanced pension option when he retires. In this scenario, Steve has a child still in college at UVA, oddly enough, and he has a few more years left on his mortgage. So he needs to know which option is best for him. Steve's average final compensation, AFC, is $56,000. He has a total of 24 years of service, and he's 57 years of age. I would tell you under Plan 1 rules, this would be a reduced benefit if Steve were to retire today. The basic benefit, he's using the benefit estimator tool. Looking at the advanced pension option, we can look at anything other than the basic benefit in that tool. It's always going to provide you with that basic benefit number so you can contrast and compare. So the basic benefit number provides Steve with a $1,241.41 a month gross benefit, taxable benefit, right? Steve is eligible to receive his reduced Social Security benefit at age 62, obviously, as are we all, and that's what he tells VRS he wants his benefit to reduce. In considering the advanced pension option, you'll see that he'd receive $1,977 and change beginning at age 57 when he retires, but then his VRS benefit would then be reduced to $777 and change once he hits the age he indicated at age 62. Keep in mind again that VRS does not communicate with Social Security, so it's up to you to keep your Social Security start that ball rolling with Social Security so you don't miss a payment. So Steve's looked at that, he's considerate, and he's heard a lot about the plop. And boy, are there a lot of rumors out and about as I travel around the state about the plop. So now he wants to consider looking how the plop might work for him. Remember, to have a plop eligibility, he has to choose the basic benefit or the survivor option. We're going to look at the basic first. To be eligible for a 1-year plop, Steve would need to work at least 7 more years to have 31 years of service, 6 years to be at unreduced level, and then 1 year beyond that, 31 years of service at retirement. Assuming there was no change to his average final compensation, meaning his salary was flat for the next 7 years, which is entirely plausible when you're in state service. His basic benefit has now changed to $2,459.33. That's, again, just the straight basic benefit, month to month, gross amount, no plop. But now he's eligible for the plop. So taking a 1-year plop, you can see that Steve is receiving a lump sum payment, again, taxable amount of $29,511.96. And his monthly benefit is reduced about $203 down to $2256.50. So that may be an acceptable impact on his monthly benefit. To me, $29,500 is not maybe enough inducement for me to lose that monthly benefit, but maybe he has specific reasons. So it's important that if you're not quite sure why you should do it, you talk to a financial advisor to look at your overall financial picture. I say to people all the time, the good news about the VRS benefit is you're doing all you can right now to enhance it. You're working for a VRS employer. It's not about the money that you contribute every month at 5% of your salary. The bad news about the VRS benefit is also the fact that it's a formula benefit because it cares not what your needs are, right? It's a cut and dry formula and everybody's needs are different. So you really want to make sure you pick the benefit option that works best for you. Talking to a financial advisor will help you and help to reassure you based on your overall financial picture, which benefit option may work best for you. Well, how much will your benefit be? Getting an estimate of your benefits is an important way for you to prepare for retirement, obviously. And you can run that at any time, but certainly as you get closer to retirement, you want to be more serious about those numbers. At the very least, you want an estimate within 12 to 18 months of that retirement date to allow enough time to consider the payout options and to consult a financial advisor. In most cases, keep in mind, you're not able to change that payout option once you're retired. So take the time now before you retire to make the proper informed decision. So we've talked about benefit options, and selecting a payout option is important, but it's not the only thing you need to consider as you prepare for retirement. As you get ready to retire, you need to plan for the cost of things like healthcare and consider life insurance needs in retirement to provide for your loved ones after you're gone. If you're a state employee, you probably already know health insurance is a major expense in retirement. It is too in the private sector, but quite frankly, health insurance is what keeps a lot of us on the job, because while state health insurance is great, it's very expensive in retirement when you have to pick up the full premium costs. So keeps a lot of people on the job until they hit Medicare eligibility at 65. But at any rate, you want to talk to your employer about the plans available to you, educate yourself on the available plans, and talk to your employer or call VRS, talk to DHRM, Department of Human Resource Management, about the Medicare supplement plans that the state offers once you're Medicare eligible at 65. As you get close to retirement, you should also think about what your life insurance needs will be. If you participate in the VRS Basic Group Life Insurance Plan, the natural death and accelerated death benefits will continue at no cost when you retire. The accidental death benefit that we all have now as an active member do not continue into retirement. And although some of the benefits continue, the value of your benefit will decrease. The life insurance benefit actually decreases in retirement. As an active member, the value of your life insurance is calculated by rounding your salary to the next highest $1,000, then doubling it. And if you have more than 20 years of service, the value of your life insurance will be calculated by using the highest salary in your history instead of your current salary. For example, a person has less than 20 years service and her salary is $34,250. We're going to round her salary to the next highest 1,000, which is 35. Then we're going to double that $35,000. So the value of that person's life insurance would be $70,000. Now, if you do carry life insurance into retirement, once you have been retired for a full calendar year, January through December window, your benefit will begin to reduce by 25%, and this reduction will happen every January 1st until the value is at its final reduction, 25% of the original value, and will stay at this level, this value, for the remainder of your life. For example, if this person's value of her life insurance is $70,000, I said, after that final reduction, the final value of her life insurance in place every month for the rest of her life will be $17,500, a not insubstantial amount. But again, it's free to you. The only cost you have is as long as the value of that group life insurance is $50,000 or above, the IRS considers it imputed income, and you'll be paying tax on it. It's pennies on the thousands, but it's important to understand while you pay nothing to maintain the benefit, it is a taxable benefit to you. So what if you want more than just the basic coverage? Well, if you have optional life coverage while you're actively employed and leave VRS service, you can convert some or all of it into an individual policy with the whole life plan. The conversion is guaranteed for you, your spouse, and your dependents within 31 days of the date you leave service. This will be an individual policy at non-group rates. So if you're enrolled in the optional group life insurance program while you're actively employed, you may continue a portion of that coverage into retirement. You, your spouse, and dependent children, if enrolled, must have been continuously covered during the 60 months preceding your retirement date. And again, accidental death and dismemberment coverage ends upon retirement. The optional life insurance amounts will reduce by 25% based on your age, beginning with your normal retirement age under your plan, and coverage ends for the optional coverage. It ends at age 80. The maximum amount of optional group life coverage in retirement you can carry is $250,000. And you must elect to continue your coverage within 31 days of that retirement date. Now, as you imagine your retirement, it's quite frankly difficult to think about what might happen if things don't work out as you plan. We've all been kind of juggling that concept for the last few months, but it's important to at least try to be prepared for any situation as best you can. In this next section, we'll look at your benefits if you become disabled or if you die before retirement. What happens if you retire, then decide you miss working or your retirement income just isn't enough? We'll take a look at the rules governing returning to work after retirement. So what happens if you become disabled before your retirement? If you become unable to perform your job duties because of a physical or mental disability, which is likely to be permanent, you don't participate in the Virginia Sickness and Disability Program, you may be eligible to apply for disability retirement benefits. Before you retire, you want to make sure you run both a disability and a service retirement estimate to compare the benefit you receive. And you can do that in your MyVRS account. The only two retirement options available to disability retirees are a basic benefit or survivor option. No PLOP, no advance pension option. And you can find out more information about disability retirement on the VRS website at varetired.org or call the Virginia Retirement System. If you're a state employee, you may already know the benefits you receive as an active employee in the Virginia Sickness and Disability Program, or VSDP, things such as sick leave and family and personal leave. VSDP also provides short and long-term disability benefits if you become disabled and unable to work. If you're close to retirement and become disabled, short and long-term disability benefits may help you bridge that gap between working and service retirement. An additional benefit of VSDP is long-term care. Long-term care refers to a wide range of personal and healthcare services that are available to employees who are no longer able to take care of themselves. So when you retire from a VSDP covered position, you may elect to continue participating in the program's long-term care program at your own expense. You'll pay your own premiums, but they're based on group rates. For a comprehensive review of all your VSDP benefits, visit the VRS website again at varetire.org and look up the VSDP handbook. Now, a few of us really think about long-term care. As I've talked to people, few people think about long-term care, the possibility, the possible need for it, as part of their financial or retirement planning. But I will tell you, most health insurance plans do not cover long-term care services. Ours certainly do not. Anyone at any age may need these services, and the cost of those services can quickly deplete savings and retirement income. A long-term care program that's administered by VRS can help you plan for the expensive long-term care services should you ever need them. And if you're a state employee covered under VSDP, you're eligible for the VSDP long-term care program at no cost to you. And that VSDP long-term care plan assists with the cost of care in a nursing home, a hospice facility, assisted living facility care, community-based care, home health care services, informal caregiving, and alternative or transitional care. If you want additional coverage, you may want to consider purchasing that coverage through the Commonwealth of Virginia's Voluntary Group Long-Term Care Insurance Program. You can purchase coverage for yourself and eligible family members, which is pretty cool. And you pay premiums directly to Genworth, who is the company that provides this coverage for us. For more information, go to the section Long-Term Care Programs on our website, or you can also contact Genworth for more information. Now, if you pass away while still actively employed in a VRS covered position, your beneficiaries may get some benefits. These benefits are different for work-related and non-work-related deaths. A work-related death means it's compensable under workers' compensation. In this case, a monthly benefit will be paid to your surviving spouse, minor children, or parents. A refund of your member contributions and interest will be paid to whomever you named as beneficiary. If you didn't name a beneficiary, it'll be the first person in order of precedence as established by law. If the death is non-work related, the way the benefit is paid depends upon if you're vested or not. If you're a non-vested member, a refund of your member contributions and interest will be paid to whomever you named as beneficiary. And if you didn't name a beneficiary, it'll be the first person, again, in order of precedence as established by law. If you are vested and your beneficiary is not your spouse, minor children, or parents, then your beneficiary will receive a refund of your member contribution accounts and all the interest it's earned. If you are vested and your beneficiary is your spouse, minor children, or parents, your beneficiary can choose between a monthly benefit or a refund of your member contributions and interest. One thing to note for a death in service is if your spouse, minor children, or parents are the beneficiary, the first person in the order of precedence by law will be able to elect the monthly benefit or refund to the exclusion of any other named beneficiary. This means that if you name your spouse and your parent equally, only your spouse will receive the refund or monthly benefit. They will have first choice because the spouse is higher in the order of precedence than either minor children or parents. Additionally, if you listed more than one minor child as your beneficiary, then as they each reach age 18, that benefit will end for them and be redistributed among the remaining minor children. Because remember, the monthly benefit, if selected, and if it's going to the minor children, ends when that last minor child reaches 18. I think it's important that we understand the order of precedence. So here's how that works for you. When you die, whether it's before or after retirement, you want to make sure that your wishes are carried out. And as a longtime life, health, and annuities guy, I've dealt with some horror stories. Folks who didn't keep their beneficiaries up to date. I've dealt with a lot, even working in state service. It tends to be men, unfortunately, who name their girlfriend when they first come on the job and they never update their beneficiary. And they pass away, let's say, on the job, and they've been married for 25 years, and their spouse is out. They don't get a payout. So it's important that you keep your beneficiaries up to date. And to do this, that's the VRS2, Designation of Beneficiary form. If you don't, then VRS must follow the order of precedence as established by law. And that's what this is. The order starts with your spouse. If you don't have a spouse and you die while in service, then your minor children would be next in order. If you die while in a deferred status and or after you retire, then any children are considered. When we say children, we mean natural or adopted children. Stepchildren are not included in the order of precedence. If you don't have any children, your beneficiary will be your parents. If they are no longer living, your beneficiary will be the duly appointed executor or administrator of your estate. And if you don't have any of those, then your beneficiary will be your next of kin. And your next of kin is determined by using the laws for the state you lived in at the time of death. It can be a very long and circuitous process. So I really encourage everybody to fill out that VRS2 form. You can name anybody as you want as your beneficiary. It doesn't have to be someone that falls within the order of precedence. But you have to submit the form to VRS so we know your wishes. And it's important to keep your beneficiaries up to date in case your situation changes. And a good way to make sure they're updated is to update your beneficiaries anytime you have a life event change. So don't forget to update those beneficiaries with other policies you may have as well, such as a voluntary savings plan through your employer or a private company. At any time after retirement, you can work for an employer that does not participate in VRS, and more people are working after retirement for a variety of reasons. Certainly, you want to be doing something in retirement, if only for your mental health, quite frankly. But a lot of people are working retirement for health insurance, so they need the extra income. There's no shame in any of that. Anytime after you retire, you can work for an employer that does not participate in VRS, and you'll continue to receive retirement benefits from VRS. Has no impact. If you return to full-time employment with a VRS covered employer, however, your retirement benefit gets put on hold and you come back to active member status under the plan from which you retired to begin with. So if you retired as a Plan 1 person, you come back to an active VRS covered position, you come back to Plan 1 status with all the service you had previously. For example, this is Sarah, and Sarah is receiving a VRS retirement benefit, and then Sarah decides to come back to work in a full-time VRS covered position. Since she's returning to covered employment, her benefit stops, even if she had a break in service. And since she's back in a full-time VRS covered position, her salary and service are being reported again, picking up where she left off. And because salary and service are a big part of that formula, these numbers are still changing and her benefit will need to be recalculated when she retires again. So even if Sarah comes back at a lower salary, that's not going to have a negative impact on her retirement benefit the next time, because we're looking for that highest window of salary wherever it fell in her VRS career, not necessarily the last 3 or 5 years, okay? Once again, when Sarah retires that second time, she'll have to take the same benefit payout option that she did the first time, okay? I helped a lady retire, well, it's been a while, 4 or 5 months back now, who's actually retired a third time from a VRS covered position. If you're going to work in a part-time position and it's the employer from which you retired, you're required to have a break of at least one full calendar month during the time you ordinarily would have worked. If you return to a part-time position with a different employer, the break isn't required, but keep in mind that all state agencies are considered one employer. So if I retired from VRS and I went to work for Department of Human Resource Management, DHRM, I'd still have to have that full calendar month break. If I retired from VRS and wanted to work a part-time position for Hanover County, Virginia, I could do that the next day because I didn't retire from Hanover County, Virginia. Okay. Let's look at an example here. This guy, we're going to call him Mike, and he retired from the Department of Transportation in March, as so many people did, and he's receiving a VRS retirement benefit. But in June, he decides to go back to work with his former employer in a part-time position. Since he's returning to the same agency, Mike must have a full calendar month break in service for his benefit to continue. Because he retired in March and isn't returning to work until June, his benefit will continue. If he had gone back to work immediately with no break in service, even in a part-time position, his retirement benefit would stop. Remember, even if Mike returned to another state agency, different from the one he retired from initially, he would still need that break in service, since all agencies, state agencies, are considered to be one employer. Now, like I said, while that one full calendar month break is required for VRS, going from one state agency to another, there may be a longer separation period required under the Affordable Care Act. So you want to make sure you talk to your employer, human resource offices before returning to a work in a wage or a part-time position for that employer. It's very important that we all understand how working can affect our benefit. And for a complete breakdown of how your benefit is affected by your return to work, see your human resource personnel or visit our website or attend the VRS presentation, Retirement, Your Next Steps. We do live and there are also recorded versions of that on the website at varetire.org. So, as you can see here, there are a number of ways to talk to VRS. If I haven't maybe covered all of your questions today, we're going to open up for questions in a moment or two. Contact us one way or another so we can help you. Keep in mind that our walk-in counseling center obviously is currently closed. I will tell you that I am able to provide remote one-on-one counseling to you. What I would ask is that you get in touch with your benefits department. We have scheduled upcoming dates at one day a month for the next couple of months. Talk to them, tell them you're interested in talking with me, find out that date. Actually, I can tell you the dates right now. I've got a date scheduled for this month on October the 14th. That's a Wednesday. Then we're doing it again Wednesday, October 19th, and then again Wednesday, December 16th. So if you're interested in learning more about your benefit, we can talk remotely either over the phone or we can do a Teams call, a video call where I can show you my screens, look at your my VRS account and go into a little bit more detail. Generally speaking, my conversations with you would be longer than the conversations you would have probably if you were to call the VRS Counseling Center. Well, I hope you found this presentation to be helpful. And as you can see, there are lots of moving parts that come into play as you approach retirement, and no one person is expected to know all the answers. So please take advantage of all of the resources available to you to make educational choices, long day. To make educated choices, do your homework using tools like your MyVRS account or talk to your employer, call VRS. Thank you all for your time. Thanks for tuning in.
So John, we do have two questions. If we could take
Okay.
those real quick, I think.
Yeah.
One question, how does having an approved domestic relations order on my VRS account affect the payout if I take a PLOP?
Well, it can impact it in a variety of ways. We'd really have to have that ADRO on file at VRS. to see how it reads. Generally speaking, they're very standard language, but I process estimates for manual estimates as well, and I've run into a couple lately that can be very confusing. So it can have a variety of impacts. It may or may not include a plop. I've seen folks who've done a basic and plop, for example. They didn't specify benefit. They didn't specify they wanted a lump sum. They just wanted part of the monthly benefit. I've had other ADROs that specifically stated what benefit option that person will choose. And that if they're eligible for a plop, and if they do take a plop, that they have to share a portion of that plop as well. So it really comes down to how the language reads in that ADRO.
Okay. Second one, how is the lump sum contribution paid out?
Well, it is a lump sum. It's a check. Right now, we're not doing electronic transfers. So if you have it paid directly to you, we're going to send you a paper check, and that paper check is going to be minus that 24%, 20% federal and 4% state. If it's going to be sent to your defined contribution account, your 457 or 403B, you're going to provide that information up front, that account information. We're going to send the check directly to them for the full amount, no taxes withheld. The process, if everything runs smoothly, usually we say the check goes out 2 to 3 weeks after that first retirement monthly benefit has been deposited in the member's account. But when you retire, you're going to indicate how you want that money paid. Do you want all or a part of it paid to you? You're going to provide the dollar amounts. You want all or a part of it rolled, and you can provide that fund information, and then we'll act accordingly.
Okay. Well, thank you, John. I don't see any other questions waiting to be answered. So again, thank you to attendees. Please make sure to check out the remaining seminars as part of the expo. And again, John is available to meet with UVA employees, and you can call the HR Service Center to get on his calendar, and he is available to meet with you at any point, as well as use your resources at VRS and the My VRS tool. Thank you. Have a great day.
Thank you, David.